In this business, the hardest thing isn't pressing the buy or sell button. It isn't even figuring out whether the market's going up or down. The hardest thing is aligning your mind with what the market is actually doing, catching the real flow before your own fears or hopes interfere. That's where the consistency is, not in scalping a few ticks or grabbing scraps from random swings. The fortune lies in being mentally aligned with the big move and letting it unfold without interference. If you can't train your mind to stay objective long enough to catch those sustained trends, you'll spend your life reacting instead of participating. I learned that the market constantly offers feedback, hints before its biggest runs, but most traders aren't listening. They're too busy seeking emotional comfort. They want to wait until the situation feels safe, until others agree with them. And by the time it feels safe, the edge is gone. The move is halfway over. See the mental trap there. Haven't you ever entered just because you felt relief in the crowd's approval, only to find it was already too late? I used to chase that illusion. Young, eager, craving certainty and action. If a stock ticked up a bit, I felt I had to be in it. If it dipped, I had to get out. I was reacting to the market instead of observing it. And that habit, the need to always do something, cost me more than any losing system ever could. Because when the real move came, I wasn't mentally prepared. I was too scattered, too attached to outcomes, too distracted by noise to recognize opportunity. Big market moves don't arrive with fanfare. They whisper. You'll notice a shift in behavior. A market that stops going down on bad news or keeps grinding higher when it shouldn't. That's the market revealing its collective psychology. But most ignore it because it doesn't match their expectations. Someone's accumulating, someone with conviction, someone acting on probabilities, not emotions. That's your signal. And if you understand probabilities, you don't argue with it. You align with it. But here's where most fail. Following a trend isn't about spotting it. It's about staying in alignment with it mentally. Can you do that? Most can't. They get shaken out at the first pullback, not because the market changed, but because their beliefs did. They feel discomfort and interpret it as danger. They take a small gain to lock in profits, and then watch as the real move happens without them. That's not a technical failure. That's a psychological one. You see, the crowd thinks in emotional bursts. They can't handle uncertainty. They crave the illusion of control. They'd rather take a sure, small win than face the open-ended nature of a large one. That impatience, that need to escape discomfort, is what funds the consistent trader's success. While the crowd reacts to short-term feelings, the professional acts on probabilities, builds positions as the market confirms, and holds as long as the market continues to validate his thesis. The crowd provides the liquidity. The professional provides the discipline. Every major win I ever had came from trusting the process longer than most people could handle their emotions. It wasn't luck, and it wasn't prediction. It was understanding that the market's behavior reflects collective psychology, and maintaining belief in my edge while uncertainty screamed otherwise. Have you ever been right about the direction, but still lost money? That's what happens when you're mentally inconsistent, when you don't trust your process enough to let it play out. Being right isn't enough. You have to think in probabilities, not absolutes. You have to let time and discipline do their work. Now, don't mistake this for gambling or blind hope. I'm not saying you should jump into every setup hoping it becomes the next big move. That's emotional trading. What I mean is this: wait for the market to confirm your edge. It always does. When the path of least resistance changes, when price action behaves differently than before. That's your cue. That's when you commit, and then you let go of control. And here's the paradox. The hardest part of trading is doing nothing. Anybody can click a button. Few can sit still when they're right or wrong and remain emotionally balanced. But that's the real test. If you can sit through noise, uncertainty, and temporary reversals without internal chaos, you've mastered the game. Think about it. The great traders, the truly consistent ones, didn't get rich by chasing excitement. They got rich by letting go. They allowed their edge to play out fully before stepping aside. That's the secret, though most don't want to hear it. They want a formula, a pattern, a guarantee. There isn't one. The only real secret is psychological consistency, patience, confidence, and detachment. When I first watched the market, I didn't realize I was training my perception. But over time, I learned to notice subtle behavior, moments when price stopped reacting to fear, or when strength appeared quietly beneath the surface. I learned that the market's message always precedes the crowd's recognition. If you can see that and trust it, you're already ahead. Understand this. The market is never wrong. Your interpretation might be. Your expectations might be. Your emotions might hijack you. But the market's message is always neutral. It's our mental filters that distort it. When a stock shows strength, you don't argue with it. When it weakens, you don't rationalize. The consistent trader responds to what is, not to what he wishes were true. The crowd trades their hopes. The professional trades reality. Most traders project their beliefs onto the market. They hope, they fear, they try to force certainty. But the market only tells you what's happening now. The sooner you accept that truth, emotionally and intellectually, the sooner you'll operate in flow. I've seen countless examples. Markets that sat quietly for months, then suddenly shifted. No headlines, no hype, just a subtle change in behavior. That's the whisper of opportunity. Most won't hear it because they need external validation, confirmation from analysts, news, or peers. But by the time they get it, the move is already halfway over. Certainty comes too late. That's why the public pays retail while the disciplined trader buys wholesale. The public waits to feel right. The professional acts when the market is right. He doesn't need proof from others. The market's behavior is all the confirmation required. A stock holding steady under pressure, that's enough. A breakout that doesn't reverse, that's enough. The rest is noise, and once you're in, the real challenge begins. To stay mentally balanced while profits build. The temptation to take a small win is enormous. Your brain screams, "Don't let it slip." But if you understand probabilities, you know the big money lies in letting your edge compound. The small wins don't change your life. The sustained trends do. I've cut winners too early before, and each time it burned that lesson deeper. The market punishes emotional urgency and rewards psychological patience. Waiting is agony for the undisciplined mind, but for the consistent trader, waiting is where certainty lives. Timing, too, is psychological. Being too early is usually just impatience wearing a disguise. You avoid that by staying present, by waiting for confirmation of your edge. Like water, the market always follows the path of least resistance. You don't predict that path. You recognize it when it's revealed. Trading is like hunting, not gambling. You don't fire at every movement. You observe. You wait. Then when your edge appears, you act decisively. And once you're in, you trust. You hold. You let probabilities play out. Everything else is noise. Emotional noise, mental noise, market noise. Most traders want stimulation, not consistency. They crave excitement because it makes them feel alive. But professionals crave neutrality. They value clarity over adrenaline. They understand that progress isn't measured by activity. It's measured by alignment with process. You don't need to trade every day. You don't need to be in every move. You only need to be in the right move at the right time, with the right state of mind. And when that moment comes, you act, then you sit. Can you do that? Can you resist the noise, the urge, the need to prove something? Because the truth is, there's no shame in waiting. The market will always reveal its next opportunity. Your job is to be psychologically ready when it does. Don't waste your emotional and financial capital on random small trades that drain your focus. Preserve it for when your edge aligns with the market's rhythm, because when the high probability setup appears, when the market structure and your confidence converge, you'll need the mental capacity and the position and size to capitalize. A tiny position won't transform you. A decisive, well-timed commitment will, but you can't have that readiness if you've scattered your capital or your focus on meaningless action. You might be thinking, what if I miss the move? That's the fear that drives most traders into impulsive, low-quality trades. They can't tolerate the discomfort of not being involved. But missing one opportunity never destroys you. Losing discipline does. The market is a continuous stream of potential. There will always be another opportunity. The real question is, will you be ready when it arrives? That's why I always say, don't anticipate, align. Let the market reveal itself. Don't predict, don't hope, don't force. Just observe. Act when your edge presents itself. That's how you survive. That's how you grow. And when you're wrong, get out. Don't rationalize, don't justify, don't argue with what the market is showing you. The market doesn't owe you a reversal, and it won't deliver fairness. If the situation doesn't validate your edge, you're wrong. Exit. Preserve your mental and financial capital, because the real opportunity, the one that matters, is still ahead. But when you are right, when the market confirms your analysis, then you must trust it fully. Hold with conviction. Add only when the market's behavior continues to confirm your bias, not when it contradicts it. Build into strength, not into weakness. Let the market's momentum fund your confidence. That's how professionals scale. And that's how fortunes compound. The truth is, nothing essential about trading has changed over the decades. The platforms, the charts, the tools, they're different. But the underlying forces are identical. Fear, greed, impatience, and hope, they still drive the same self-destructive behaviors, which means the same opportunities still exist for anyone willing to master their inner world. The market is not a puzzle to be solved. It's a mirror that reflects your beliefs, your fears, and your relationship with uncertainty. If you lack discipline, it will expose it. If you chase comfort, it will take your money. If you cultivate patience and objectivity, it will reward you. So, when you ask how to catch explosive trends before they run, the answer isn't technical, it's psychological. You don't need to master the market. You need to master yourself, because the market won't change. You will. When you've mastered your emotions, your fear, your need for action, your resistance to uncertainty, the market's subtle messages become clear. You begin to perceive the structure beneath the surface noise. You'll see trends forming while others doubt them. You'll hold positions while others panic. And when the big move comes, you'll already be in alignment, watching the expansion unfold, while the crowd still questions what's happening. Big opportunities whisper before they shout. That's the essence of this business. and it's a truth most never internalize. The average trader listens for noise, for drama, for headlines. They want to feel certainty before acting. But by the time the crowd feels confident, by the time the narrative is loud and obvious, the opportunity is already gone. The professionals, the consistent winners, are already positioned. They heard the whisper. They trusted their edge. You know what that whisper looks like in the market? It isn't dramatic. It doesn't shout. It's subtle. A stock that's been under pressure suddenly stops declining, even with more bad news. The story still looks terrible, sentiment is negative, and yet price stabilizes. That's the whisper. Or a market that's been consolidating quietly begins to drift upward on light volume, without attention or hype. That's another whisper. You won't read about it. You won't hear it on the news. There won't be a crowd pointing to it. But if you're watching without bias, if your mind is calm and open, you'll see it. Have you ever noticed a stock acting stronger than it should, and then hesitated because you didn't understand why? That hesitation, that need for explanation, is where most traders stop. They notice, but they don't trust their perception. They want outside confirmation. But confirmation is expensive. By the time everyone agrees, the edge is gone. That's how the market punishes dependence on external validation. The professionals operate differently. They act on internal confirmation, their own trust in process and observation. The whisper is the wholesale opportunity. The shout is the retail rush. Which price would you rather pay? But understand this. Whispers don't last forever. They're fleeting. The market offers a window, a moment to act before the crowd notices. And it doesn't wait for your emotional readiness. That's why patience and attentiveness are everything. You must be willing to endure the dull times, the stretches where nothing exciting happens, and remain focused enough to detect small but meaningful deviations. A market that refuses to go down on bad news is communicating. A stock that keeps inching higher in the face of indifference is telling you something. The question is, are you listening? The true skill lies in distinguishing a real signal from random noise. Not every fluctuation matters. Most of the market's movement is meaningless, emotional reactions and short-term corrections. The crowd mistakes that chaos for opportunity and bleeds slowly in the churn. The professional, on the other hand, waits for consistency, for the steady, quiet persistence that signals accumulation. It's never about a single tick or one day's move. It's about the pattern, the consistent tone beneath the surface. Once you train yourself to sense that quiet order, you'll recognize that someone with patience, size, and conviction is positioning themselves. When you see that, ask yourself, do you really want to be on the opposite side? Let me tell you something from experience. Some of the most powerful trades I've ever seen began in the dullest markets, the ones everyone ignored, forgotten stocks, unnoticed sectors. And then slowly, quietly, the energy shifted. No headlines, no excitement, just subtle persistence. And that's when the professional acts, not with full commitment right away, but with measured engagement, testing, observing, building size only when the market confirms alignment. By the time the crowd notices, the professional is already seated comfortably, letting probabilities do their work. That's the difference between catching the whisper and chasing the shout. Haven't you seen that dynamic before? And when you finally felt comfortable, it was already too late. That's because the whisper always feels uncertain. It's meant to. That's why most traders miss it. They can't act amid doubt. They crave the emotional comfort of consensus. But in trading, by the time you have proof, the profit is gone. The professional understands this and embraces the discomfort. He knows that uncertainty is the price of admission for catching the move early. If you can't tolerate that uncertainty, you'll forever arrive late. Think about it this way. If you wait for the crowd to confirm your belief, you've already surrendered your edge. You're no longer trading, you're following. And following the crowd means paying the highest emotional and financial price. The crowd buys at peaks and sells at lows. The consistent trader listens to the whisper, buying when the market feels dead and exiting when the crowd screams with enthusiasm. That's how the professional extracts value. There's also humility in following the whisper. You don't need to know why it's happening. You don't need the story or the reason. The market's behavior is the reason. The chart tells the truth long before the news explains it. When you see quiet strength, price holding firm under pressure, you don't rationalize it away. You align with it. Later, when the news breaks and the world understands, the crowd will act. But by then, you're already positioned, already profitable, already calm. Human nature resists subtlety. People crave drama, explanation, and validation. They dismiss quiet strength because it doesn't feel exciting. But in trading, subtlety is where truth lives. The whisper is the seed of the explosion. If you train yourself to recognize and trust it, you'll consistently be positioned for the move before it happens. If you wait for the shout, you'll always chase. And chasing, emotionally or financially, is how you lose. So, watch for the whispers. That's where alignment lives. That's where confidence is born. That's where the next explosion begins. Watch for the markets that should be breaking but hold firm instead. Watch for quiet strength that contradicts the headlines. Watch for the underlying accumulation that doesn't match the story everyone believes. That's your advantage. That's how you recognize alignment before it becomes obvious. That's how you position yourself before the explosion. And once you're in, sit tight. Don't let the first burst of volatility shake you. Don't let the noise of the crowd disrupt your conviction. When the expansion begins, that's when your mind will be tested the most. Sitting tight isn't passive. It's the ultimate act of discipline. It's harder and far more profitable than buying or selling. Most traders don't believe that when they hear it. They think trading success comes from timing, from perfect entries and clever exits. They obsess over precision, looking for certainty in something that can never provide it. They forget the real challenge. Can you stay still while your edge unfolds? Can you trust the probabilities long enough to let them play out? That's where the real profits are, not in a dozen quick reactions, but in the patience to let one strong trend express itself fully. Anyone can buy. Anyone can sell. That's not skill. That's access. The real mastery is doing nothing when every part of you wants to act. Very few can sit still once they've entered a position. Very few can tolerate the uncertainty that comes with waiting. And that's why so few traders ever achieve consistency. They don't fail because they can't trade. They fail because they can't wait. Haven't you done it yourself? Closed a position too early because you couldn't stand the silence, the not knowing. The average trader craves activity. They want the dopamine rush of constant decisions, the illusion of control. They settle for small wins to relieve tension, mistaking emotional relief for success. They take a small gain, call it victory, and walk away, only to watch the same market run 10 times higher without them. That's not strategy. That's anxiety. The disciplined trader sees it differently. He knows that true opportunity matures slowly. He enters when his edge appears. Then he allows the process to work. He doesn't force outcomes. He allows probabilities to unfold. He waits. He observes. He sits. Because he understands that large moves are rarely instant. Sitting tight is psychological warfare. The market will test your belief, your patience, your nerve. Even in the strongest trend, there will be retracements, pauses, and volatility designed unintentionally to trigger your emotions. And most traders fail those tests. They see their unrealized gains shrink temporarily, panic, and sell. They turn temporary discomfort into permanent loss of opportunity. The market doesn't punish them. Their own impatience does. The market is neutral. It's simply revealing how much emotional control they lack. I learned early that my biggest losses didn't come from being wrong. They came from not staying right. I would catch the start of a trend, watch it develop beautifully, and then cut it short because I wanted to lock in profits. I thought I was being prudent, but I was actually sabotaging my own edge. Later, I'd see that same position double or triple without me. Each time it happened, the pain of realization burned the lesson deeper. The real money isn't made in action. It's made in restraint. When every instinct screams, do something, that's precisely when you must do nothing. That's the paradox of trading. The public never understands that inaction is an action. They equate movement with progress. But the professional knows that sitting tight is the most active decision there is. It demands mastery over fear and greed. It demands the ability to trust your edge without needing proof in every moment. Most traders don't possess that trust. Their actions are driven by emotional impulses, not structured beliefs. They sell at the first pullback. They jump at every flicker of excitement. They confuse emotion with intuition. Haven't you felt it? That restless urge to click the button just to relieve tension. That's the emotional mind trying to regain control in an environment that demands surrender. When you're aligned with a real trend, you'll feel constant doubt. You'll hear opinions that contradict your position. You'll read headlines warning of reversals. You'll see temporary corrections that look like collapse. Through all of it, your job is to maintain psychological neutrality, to do nothing. That's the real test. That's what separates the consistently profitable trader from the crowd, because the professional knows that trends extend far beyond what the majority believes possible. Sitting tight is not laziness. It's a deliberate discipline. It's the practice of letting your capital and your conviction work for you. The market rewards those who allow time to amplify their edge. It doesn't pay based on how many trades you execute. It pays based on how well you align with large movements. One well-managed position can outperform 100 short-term wins. That's the arithmetic of probability. The market is, in essence, a mechanism that transfers wealth from the impatient to the patient. Each time the crowd sells out early, each time fear or boredom forces them to act, that wealth flows to the trader who can sit through discomfort. The longer you remain calm while others react, the more the market rewards you. That's why patience is more valuable than cleverness. I once held a position that had already moved significantly in my favor. A cleanup trend, strong, confirmation. Everyone around me told me to exit. They quoted logic, valuation, news. They said it couldn't go higher. But my process, my reading of the market's behavior, said otherwise. So I held. I ignored the noise, the doubt, the crowd. And that position doubled again before the trend finally ended. If I'd listened to fear disguised as wisdom, I'd have sold early and missed the real payoff. That single trade taught me what dozens of smaller ones never could. Consistency comes from mental endurance, not intellectual brilliance. Still, most traders won't experience it. They don't trust the market, and they don't trust themselves. They take comfort in small profits, not realizing that those profits are the price of their fear. The market doesn't forgive emotional weakness. It exposes it. It rewards only the trader who can endure uncertainty without losing discipline. Sitting tight isn't about blind hope. It's about trusting verified information. You sit only when your edge is present, not when you're wrong. If the market invalidates your thesis, you exit immediately. But when the market confirms you, when it continues to behave in alignment with your expectations, then doing nothing is the hardest and most profitable thing you can do. That's the paradox of mastery. Cut losses quickly and hold winners with conviction. Act decisively when wrong. Be still when right. Most traders reverse that formula. They hold losers hoping for recovery and sell winners too soon. That's why they remain inconsistent. I've seen traders destroy themselves not because they lack knowledge, but because they lack control. They'd enter perfectly, then second-guess every fluctuation, re-enter, chase, hesitate, repeat, until what began as a winning idea became a string of emotional mistakes. The market didn't beat them. Their inability to stay still did. I have also seen the opposite. Traders who cultivated calm. Traders who could hold through noise, doubt, and boredom. Who didn't flinch at temporary adversity. Those traders didn't get rich through prediction or genius. They got rich through psychological steadiness. Their strength was in emotional stillness. They understood that the big swing belongs to the trader who can wait. The market will constantly tempt you to move, to react, to exit early, to chase excitement. It will challenge your self-trust at every tick. It will dangle small, quick profits to lure you away from the larger gain. And each time you act impulsively, you transfer your edge to someone more patient. The professional ignores those emotional triggers. He trusts the structure until the market itself invalidates it, not until his emotions demand relief. That's how fortunes are built, not by constant motion, but by calm endurance. Master yourself, or the market will master you. That's not philosophy. That's fact. The market isn't an adversary. It isn't your friend either. It's neutral, a mirror reflecting every thought, fear, and weakness within you. If you step into it without psychological discipline, it will expose you instantly. Most traders blame the market when they lose. They say it turned against them, that it was unfair, manipulated, unpredictable. But the market is never wrong. Only traders are. If you can't master yourself, the market will keep repeating the same lesson until you've learned it, or lost everything. Haven't you done it? Known you were breaking your own rules, pressed the button anyway, and watched the market punish you? That's not bad luck. That's internal sabotage. The greatest enemy in this business isn't price action. It's your own mind. You think you're fighting the market, but in truth, you're fighting your beliefs about it. Fear tells you to sell when your system says hold. Greed tells you to buy when your system says wait. Hope keeps you holding losses long after your stop should have triggered. Impatience pushes you into trades that don't meet your criteria. None of these forces come from the market. They come from within you. The market merely reflects them back at full intensity. If you can't bring those emotions into balance, they will destroy you. Mastering yourself means learning to act opposite to your impulses, to behave from belief and process, not from emotion, because your feelings will always tempt you to do the easy thing. Take the quick win, avoid the discomfort. And that's exactly what keeps most traders from ever becoming consistent. Discipline tells you to stay still and let your edge unfold. Emotion tells you to act, to relieve the tension, to do something. Discipline says sit through it. Emotion says you'll miss out. Discipline tells you to cut a losing trade and accept the information the market is giving you. Emotion tells you to hold and hope it turns around. Discipline waits for the moment when your criteria are met. Emotion trades just to feel in control. This is the real battle, not between you and the market, but between your instincts and your awareness. Which side wins in you? I've known traders with encyclopedic market knowledge. They could analyze data, read the tape, dissect charts. They could explain price behavior as well as anyone. But knowledge never saved them, because they couldn't manage themselves. They averaged down on losing positions. They sold winners too early. They jumped in and out of trades driven by anxiety instead of the process. And all their brilliance meant nothing. The market doesn't pay for intelligence. It pays for consistency. Consistency is born from discipline, and discipline is born from self-mastery. When I was younger, I thought the market was smarter than me. I thought success meant learning enough to outthink it, mastering every pattern, every nuance, every secret. But over time, I realized it wasn't the market outsmarting me. It was me outsmarting myself. I could spot an opportunity, but lacked the patience to let it work. I could identify a loss, but lacked the humility to admit it. I traded my rules for emotions, my logic for pride. And that's why I lost. The moment I understood that, everything shifted. The market didn't have to be conquered. I did. Look around you. Most traders can't master themselves. That's why they're always behind. They buy when it feels good, when the crowd's euphoric. They sell when it feels awful, when panic makes everyone desperate for safety. Their decisions are emotional reactions dressed up as logic. And because the majority never learn self-control, the majority must lose. That's not cynicism. It's arithmetic. The market redistributes wealth from the emotionally reactive to the emotionally consistent. It rewards patience and punishes impulse. That's the real law of trading. The disciplined few profit because the majority fund them through their mistakes. Which side are you on? To master yourself, you must first understand yourself. You have to see where you're vulnerable. Do you crave stimulation? Then boredom will destroy you. Do you hate being wrong? Then you'll hold losers far too long. Do you need to feel right? Then you'll take small profits too early just to protect your ego. Each weakness has a cost, and the market will collect it relentlessly until the debt is paid in full. But once you recognize your internal patterns, your emotional defaults, you gain power. Awareness is the first step toward mastery. When you see your impulses for what they are, just feelings, you can stop reacting to them. You can observe without acting. And in that space between emotion and response lies all your potential as a trader. Some people never reach that point. They repeat the same cycles endlessly. Lose, blame, repeat. They curse the market for their pain, refusing to see the reflection in front of them. They study more, analyze deeper, chase the illusion that knowledge will replace discipline. But no amount of information can compensate for a lack of self-control. The market doesn't punish ignorance. It punishes inconsistency. You'll see traders spend years accumulating techniques, systems, and indicators, yet never achieve peace. They keep looking outward for answers that exist only inward. They tell themselves, if I just find the right setup, the perfect entry, the foolproof method, I'll win. But no method can override a mind at war with itself. Because in the end, trading is not about predicting markets. It's about mastering reaction. The disciplined trader knows this. He doesn't try to control outcomes. He controls himself. He accepts that every trade has an uncertain result, and he's fine with that. His focus isn't on being right. It's on executing correctly. Knowledge without discipline is noise. Awareness without self-control is paralysis. Only when you integrate both, when your reason governs your instinct, do you reach the level of mental freedom that allows you to trade in the zone. And that's the truth most traders resist. They want to fix the market, not themselves. But the market doesn't need fixing. It's perfectly neutral. It simply reveals your strengths and weaknesses through results. Every hesitation, every impulse, every time you deviate from your plan, the market mirrors it back instantly. If you don't learn from those reflections, you'll keep paying tuition in losses. The irony is, most traders already know what to do. They've read the books, learned the strategies, memorized the rules. But knowledge isn't power in trading. Execution is. And execution requires discipline. Not the discipline to act, but the discipline to not act when there's no edge. That's why mastery in this business isn't intellectual. It's psychological. The mind that can wait, that can cut losses without hesitation, that can hold winners without fear. That's the mind the market rewards. In the end, the greatest battle you'll ever fight isn't with price, with other traders, or even with uncertainty. It's the battle between the disciplined self that follows process and the emotional self that seeks comfort. The one you feed daily, through awareness or avoidance, decides your future. So ask yourself, when you're in front of the screen and the urge rises to act, who's really in control? Your process or your emotion? Because until you conquer that, no amount of analysis, tools, or talent will ever make you consistent.